All right, I'm going to start with the stock market. This has been an exceptionally powerful rally out of the what I think is going to turn out to be a short 4-year cycle low, and I'm really starting to doubt that we're going to get a retest of these lows. Um, we didn't have really much of anything that would qualify as a half cycle low, and I've noted before that sometimes that'll happen. There just really isn't anything that's recognizable as a half cycle low uh, during a especially powerful first daily cycle. Also notice that the price broke right through this intermediate trend line on its first try. That would have been a potential spot for a move down into a half cycle low. Would have been to fail to get through that resistance on the first try and pull back, but that didn't happen. This is was strong enough to go through this trend line on the first try. It's also pierced the psychological 2700 level on the first try. So I suspect, what I've thought all along was that this first daily cycle would be strong enough to at least test this 2800 resistance zone here before the first daily cycle tops. So I think we've probably got another 100 points. I think we the government was open for another 3 weeks, so uh, I'm going to take a guess and say this first daily cycle is going to continue rising into that next deadline, which I think is um, somewhere here in the 11th week, I would guess. This market has just continued to run over people that are trying to pick the top. We saw the same thing happen during the baby bull in gold. People were, they'd been conditioned to expect only bad things to happen, and traders just could not flip the switch to bull market strategies, uh, and especially to um, the kind of strategies and expectations one should have coming out of a multi-year cycle low, and especially a multi-year cycle low where sentiment had reached extreme bearish levels. And at this bottom right here, we saw sentiment levels that were similar, if not more extreme, than at the bottom of the bear market in 2009. So, if we assume that the uh, reaction to the upside is going to be um, as extreme as it was on the way down, then um, we should just expect that this is going to be a very strong first daily cycle, and it's just a mistake to keep trying to pick a top, just like it was a mistake to try and pick a top in the baby bull rally in gold. All right, moving on to the weekly charts. We've had 6 very strong up weeks. Actually, a flat week last week was a consolidation as price entered that pennant uh, pattern, waiting for the FOMC statement. Once we got it, broke out to the upside and continued higher. That would have been the opportunity to drop down into a half cycle low, but the Fed gave the market what it wanted, and we broke higher. And like I said, I think we continue. And we do have a cross on the weekly MACD, so you could use a similar strategy here, as I suggested in oil. Once we get the weekly cross, then you could just hold your positions until the MACD crosses back down. um, so moving on to the tech sector, you can see, here's that sideways consolidation as the market was waiting for the Fed decision, and I may have pointed this out previously, but the Nasdaq was holding that 7,000 level. I suspect we're going to hold this during the next daily cycle low as well. Uh, and as I said, my feeling at this time is that we are probably not going to retest the December lows. Um, I know a lot of analysts are kind of coming around to the idea that we probably are not moving into or rolling over into recession. So we aren't starting an extended bear market like everybody was predicting as this was unfolding. I think most analysts are coming to realize that this was a false alarm, that we're not moving into recession. But I think most people are still in the camp that we're going to retest these lows. And I have a feeling um, that most that they're going to be wrong about that, and we're not going to test these lows, and that's going to be the fuel for this to just keep going higher and higher as people keep trying to pick the top of this rally and then short the retest of the lows. I just my spidey sense says that it's probably not going to happen. That it's probably very similar to 2009, that bottom. We did not go down and retest that bottom. We just took off and never looked back. And I have a feeling that the same thing is happening here. That this uh, massive uh, breath thrust out of this bottom is signaling that this is something extraordinary, and we're going to get a V-shaped rally and probably never look back. All right, moving on to oil. I think this is probably the sector that most people are interested in. This is, I think, where the biggest gains are going to occur. So finally on Friday, we've broken through this, what I think is probably a neckline to an inverse head and shoulders pattern. The right shoulder um, was pretty strong. Didn't really even come down to test this $50 level, and oil quickly broke through the 50-day moving average. Tested it one time here uh, on Monday, and it took two attempts to get through it, but on Friday oil did um, break through and, more importantly, close above this neckline. So I tend to think we've um, probably broken this for good, and now we're on our way. This head and shoulders pattern would target something in the 62 to 64 um, zone, and we've just gotten during the decline, we just got stretched so far below the 200-day moving average that the rubber band needs to snap back in the other direction. And I think this first daily cycle in oil, and as I've said, one of the reasons I quit trying to trade oil with cycles is they had just become so erratic. So who knows how long this first daily cycle could run, but I do think oil is going to come up and at least test this 200-day moving average before um, the first daily cycle tops. And you can see here, even though MACD did get kind of closed, it never did cross. So we never really got a sell signal on a daily MACD if you were using that as a stop or a level to take profits. It didn't trigger. All right, moving on to the weekly charts. For those of you that are wanting to hold your position much longer, try to make much larger gains, the weekly MACD did cross this week. You can see once oil closed above this 10-week moving average, tested it a couple weeks ago, also held above the 200-week moving average, again tested the 200 last week and this week, and also tested the 10-week moving average. It's held both times, and oil continues to close above this 200-week moving average, and I doubt that it's going to drop back below it at this point. I think oil has recovered this, and it's going to hold. And I doubt that we're going to get a retest. I think this was the 3-year cycle low in the CRB, and the same as stocks. I do not think we're going to get a retest later in the spring. All right, so moving on to a little bit longer term chart, you can see this was the crash in oil um, at the last 3-year cycle low in 2016. We dropped below that 200-week moving average, turned the moving average down. This last 3 years has been mostly a consolidation basing phase for the CRB. Uh, you can see oil did get above the 200 and then briefly poked back below it, but the 200 is starting to flatten, and I suspect is going to turn up. As I believe over the next 5 to 8 years, we're entering an inflationary phase. And as I've said before, I think this is going to be good for pretty much all asset classes, stocks, the CRB in general, oil, and gold. Gold has been leading, which is quite often what happens as traders start to anticipate inflation, just like they did in 2009. Gold started to lead. It bottomed slightly ahead of the CRB, oil, and the stock market, and it did it again this time as well. Gold bottomed in August, and I'll switch over to that chart of the gold here in a bit. But oil has bottomed about 6 months later, and I think we're ready to hold above this 200-week moving average now and start to turn the average back up. All right, moving on to the CRB. Again, I think this is probably going to turn out to be a final 3-year cycle low, and I have my doubts that this is going to be retested. The last 3 years have been a basing pattern, basing phase, and I think where the CRB is ready to start moving up in earnest over the next 5 to 8 years. All right, so it's been over 10 years since the bubble popped, and it's time for this part of the cycle to end. I think it ended here in 2016, and then we've been basing for 3 years, and I think we're ready to start another inflationary phase. And if I'm right about the collapse in the dollar over the next 5 to 8 years, we may get an even bigger inflation than we did at this top in 2008. Although I think this time, the more liquidity is going to flow into the metals rather than the energy and base metal market like it did here. This top was actually this entire leg up, and while gold did participate, obviously, this was led by energy. And then we had the kind of the echo rally out of this collapsing bubble, and gold did better than oil during this phase. But I think we're ready to start a brand new commodity secular bull market, very similar to what started right here. And I think this time, the metals and maybe agriculture are going to lead the sector. So I don't necessarily think that oil is going to get above $150, but I do think gold is going to go above $2,000 and probably a long ways above $2,000 when it's all said and done. All right, moving on to the metals. You can see that gold has just been much stronger than the CRB. At that bottom right here in 2016, you can see gold bottomed a little bit before the CRB, which bottomed in I think it was February or March of 2016. And at that time, the CRB had dropped below these levels of 2001. Clearly, gold uh, was nowhere near those kind of levels. So the metals market has just been much stronger than the CRB in general. And here was our baby bull rally, and then we entered this long basing phase here. And since I believe the CRB has completed its 3-year cycle low, then I think that is also the signal that gold is done with this basing phase, and we're ready to finally break out above this baby bull high, come back up, test these all-time highs at 1900. I would guess that we'd get a nice pullback from that. Um, Once we do eventually test that 1900, and I think this is going to turn out to be a very large cup, probably a handle once we test the 1900, and then I think the breakout, uh, we're going to run to, at least 5,000, somewhere between 5,000 and 10,000 before this bull market in gold is over. And this is going to take a while. It's not going to be a straight up shot. This has been a very difficult, long basing pattern. Once the bottom of this, what is kind of a rounded bottom, once uh, this really starts to sink in that gold has bottomed, we're probably going to get some strong buying. That's kind of what happens out of these rounded bottoms. So you can see we had the rounded bottom here. Once it became clear to traders that the gold had bottomed, then you get this strong buying phase as you get on the advancing side of this rounded bottom. Same thing's happening here in gold. We're getting this rounded bottom, and I think we're already starting to see it as we came out of this last daily cycle low. Extreme buying pressure as the market's recognizing that a bottom is in, and then once this bigger pattern comes into play and we start to form the right side of this cup, I think we could get a very strong push up to 1900. Um, Maybe within the next year and a half, we could um, make it to this level, and then at that point, I think we would have um, you know, an extended multi-month pullback from this level. I don't think we're going to go through this on the first try. That would be the handle for this, what I think is going to turn out to be a cup pattern. And then maybe by 2020 we get the breakout, and then we're on our way, and the next phase of the bull market has started. And somebody mentioned this in the comments. I do tend to think we're starting the next C wave. So I'm going to say this is probably the A wave here, and then this whole mess has been just the B wave from hell. And I think that's over. This rounded bottom was the end of the B wave, and I think we probably are starting the next C wave advance. All right, and then I'll finish up with the daily chart of the miners. Um, so during the baby bull rally, cycles stretched exceptionally long. It was a mistake. The COTs got very bearish, and people were just constantly trying to find an excuse to pick a top. And many people just ruined their portfolios trying to pick a top and short the metals out of that baby bull, or during that baby bull rally out of the bear market bottom. And I think we're seeing the same thing is happening here. We're starting to get on the right side of that cup, and we've got a very strong move. We came back down. The miners did, tested briefly, dropped below the 200-day moving average, and then we have this breakaway gap back above, and then we're off to the races. And I think it's a mistake to try and pick tops. I think we're in a very similar environment as we were during the baby bull rally, and cycles may just, they just may stretch extremely long. The daily cycles, of course, have been running about 40 to 50 days anyway, and that's what we got here. But the intermediate cycle may just run, ridiculously long, especially if the dollar still has, um, if we get another failed daily cycle, then the dollar's probably got another 2 months yet before bottoming. And so, we could have another 2 months before um, the metals give us an intermediate top. So um, I think I would just ignore the intermediate cycle count right now. And even though it's mature, I think I would focus more on the dollar cycle. And it looks to me like the dollar is left translating another daily cycle. So that means we've potentially got, anywhere from 25 to 35, 40 days yet before the dollar bottoms. And I don't think I would try and pick a top in the metals until that happens. All right, so you can see here um, the miners recovered this consolidation box, briefly dropped below it. That would have been the opportunity for an intermediate decline. Was losing, dropping back out of this consolidation box, but as I pointed out, we got that breakaway gap back into the box, and so I think the intermediate decline is off the table, and I think this daily cycle is at least going to test this upper resistance zone of this consolidation box before we get, maybe at that point we get an intermediate degree correction, but still very early in the daily cycle. We've got, a very strong push out of this bottom. A lot of people trying to pick a top in gold, and that's the fuel for this just to continue higher. So I'm going to say this daily cycle is probably going to test this upper resistance zone of this consolidation box before uh, we top. And of course, there are going to be pullbacks along the way, but I don't think we have to worry about any significant. Yeah, I don't think this cycle is going to left translate. I'll put it that way. I think this cycle will also right translate and test this resistance zone up here before topping. And then finally, we'll look at the progress of the coil. This is a monthly chart. I noted this, the coil right here. We had 3 months where the miners just went nowhere, and then we had that violent move out of the coil lower. And I noted at the time that most of the time, about 70, 75% of the time, the initial move out of a coil ends up being a false move that's reversed by a much stronger and much more durable move in the opposite direction. And that is exactly what is taking place here. Price has recovered the coil consolidation zone. So I think we should expect throughout 2019 that we're going to get a very powerful and trending move up in the miners, and I think at some point in 2019 we're going to test the baby bull high. All right, so that's it for the weekend report. I'll say again, I think we are starting an inflationary phase. I think you can buy anything. Everything should go up during an inflation. The early part of an inflation, everything tends to rise together. Stocks, gold, commodities, oil. It's only in the very mature stage of inflation where liquidity is flowing mostly into the commodity markets that inflation becomes bad for the stock market and bad for the economy. But during an initial stage, everything goes up together. So, take your pick. I think you can pretty much throw a dart at at the wall and hit something, and everything is going to go up for the next several years anyway.